The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Good evening. Welcome to another edition of my setups. This is a webinar organized by the kind people of investing.com. And today I will be doing a webinar for you presenting my setups. We'll also be talking about how which markets I'm looking at to get long or short, and also more importantly, why. The structure of today's presentation, I'll try to make it as interactive as possible as I can, in the sense that I will present some material I have already prepared, some trades that I think that are looking very promising, some that I would rather stay flat, some markets I would not participate, because that's also important, I think. And then I will be opening up the floor if you want, and perhaps you can also interrupt the presentation for some questions in between. So, and then I will, we can also look at some markets you may be interested in. So today's presentation, my setups for week 26. As I mentioned, this is an exercise, a weekly exercise I do, in the sense that every after the close of each Friday, I look at my macro setups, which markets I think are set up for the next week, and then go into the daily chart for the rest of the week. So basically do my macro analysis on weekends and my technical analysis on weekdays. So this week we will be covering these are the first of all, we'll be covering soybeans, but these in general, these are the asset classes I'm looking at. I'm a futures trader, and I'm looking at these 11 asset classes, if you will: equities, bonds, currencies, cryptocurrencies, energies, precious metals, industrial metals, and then soy, softs, grains, and livestock. These are the markets I'm trading. These, I don't do stocks, I do futures for these 11 asset classes. So today we'll be covering trades in soybeans. We'll be covering also trades in bonds, precious metals, and softs. So if there is any other market you would be interested in, let me know and we may cover it at the end. Sorry, I also skipped to mention we'll be covering energy. I forgot to highlight it there. So let's begin with the two most important slides of the presentation. First of all, the risk warning. The second, which means that there is a very, very high degree of risk involved in trading. Past results are not indicative of future returns. S.M.A.R.T Trading Systems Limited and all individuals affiliated assume no responsibilities for your trading and investment results. I do not do any kind of do not give any kind of guarantees for my webinars or my live presentations, my workshops, except one, that you will have losses in trading. And with that out of this way, let me begin by giving you a gift. And what is this gift? This is how my presentations usually end. So in order to help you stay awake, I will be offering free bonuses for those that do manage to stay awake. And what are these bonuses? Well, I'm preparing, I'm launching a course this week to explain my methodology, which will be the point of this, the rest of the webinar you will see from a practical point of view, and also an accompanying community, coaching, and closed code indicators. So we have course, coaching, community, and closed code indicators. The course will be given for free because I think people should be focusing on implementation rather than information. So the course, for reasons for transparency, I don't want to be selling information, will be given for free. And then if people are more interested, they can join the community, coaching, and they get the indicators. So all you have to do is to get the courses. Again, as I mentioned, is stay awake and also email me at alex@alexspiroglu.com. Send me an email, and as I will be launching the course, all the modules, 12 modules, which I will show you in exactly 1 minute what this will include, send me an email and I will include you on the guest list. All right, let's begin. As I mentioned, let's start with bonds. Right, so this is the first chart of today's presentation, 10-year Treasury note futures. Let's try to explain what we're seeing for those that probably see my presentation for the first time. So top panel is the Treasury note futures. This is the weekly chart. As you can see, we have some buy and sell alerts. Some are red and some are green, obviously for buy and sell, and some are big and some are small in size. So this is what I call major and minor alerts. And how are these created? Now these are created from the second panel, which represents the commitment of traders report. Um, for those that may not know what the commitment of traders report, basically it is an account. It's a data that come out of the CFTC and gives out the information of who controls, who participates in open interest, total number of unclosed positions, which are basically and all that participating traders. So you have large traders, I mean institutionals, and small traders, and the big traders are subclassified in two categories: commercials, basically traders that participate in the markets as part of their business functions. For example, Cadbury's will be participating in sugar and cocoa markets in order to make chocolate bars. Or, for example, British Airways will be participating in energy markets to cover its cost of doing business, which is flying around the world. So these are the commercials, and these are depicted in the red line of the second panel, and it shows basically the positions that the biggest traders in the futures markets have. And I've kind of like broken down the data into a system, and this is what the buy and sell arrows come from. Now, obviously, in order to go into the commitment of trader report, we will need a lot more time, hence the course, and that's why I'll be giving it for free. And what it shows is this is again the weekly chart, and what it does is when as soon as I have an alert, I use it as a setup, which means it gives me a directional bias for long or short, go into the daily chart and take my signals from there. So the COT setups here is alerts setups. It's not exactly signals. So depending on the strength of the signal, so it's I have it as major, like a big arrow, or a small arrow, which usually means we don't get large moves out of it. Usually it's some kind of a reaction. Now, obviously, as you can see, for example, April 2024, the minor buy alerts resulted in huge moves. Um, but there's also some informational value in that, and that there might be change of trend and so on and so forth. Again, so that's a very brief introduction about the commitment trade report. The third panel in the chart is one of the sentiment indicators I use, and this is the market flow, the crowd flow sentiment index. And when the indicator is there's a lot of positive bullish market sentiment, a lot of market flows in one direction, usually the market tops out. And when there is too many bearish flows, and that's at an extreme, then the usually market bottoms out. And the fourth and last one, the last panel, is the smart sentiment composite, because I have a few sentiment indicators that I use, and these are part of that composite. So what does this chart mean? Basically, it says that it gives an understanding of the macro, from a macro point of view, how I see the bond market, the treasury note markets. So from April, we had a major sell signal, sell alert. It lasted for 8 weeks. And now we have some kind of positive sentiment coming into the market. And also and this is one of the sentiment indicators that is looking bullish. So the market flows sentiment indicator is bullish for the market. And we've seen previous instances of that. So although from a commitment trader point of view, we don't have a buy signal, we have from a sentiment point of view. And we can see when there was bearish sentiment, what happened, how the market topped out. And now, again, the composite is also bullish. Now, so let's switch to the daily chart. Again, 10-year note futures. This is the day chart. We look at seasonals. The bottom indicator is seasonals, and there is basically positive seasonality up until August. So that's a good macro factor to also be taking into consideration. So let's look at our the smart trade system, the workflow. That I use the step-by-step methodology to evaluate markets in a rules-based way. First of all, as you can see on the chart, I go look at the weekly chart, look at the intermarkets, which we will not be examining today, commitment of trades report, sentiment, seasonals, and these are two bullish factors. And then I go into the technicals, and then I use a strategy, a framework, which is the forest framework, setup, signals, stops, and size. So again, I'm taking you through a step-by-step fashion for this rules-based methodology. And sentiment and seasonals are very positive for the bond market. So let's switch to the daily chart. So the bond market chart is color coded, and this is color coded based on trend. And I will explain you the framework I use to classify the trend. Because most people classify trend as bullish or bearish, so it's like a binary decision, which of course I'm not saying it's not useful, but I think I've fine-tuned it into 8 stages rather than 2. So let's see what is going on. This is the MACD momentum indicator. It's a momentum indicator I created in 2015 and I was awarded in 2022. It's an improvement of the classic MACD indicator, and it shows that there is bullish momentum in the bond market, although the trend is definitely bearish. So you have a counter trend bouncing move, which of course, if it continues, you will change the trend. But for the here now, the trend is bearish, but with bullish momentum. And this is the market map model. This is the one that I use to classify trends. So if you go back, let's go back, right? And we see that the trend now is in stage 6. Basically, I have an 8-stage trend classification market structure model. And this is how it looks like. Let's try to explain what the logic behind it is. So as you can see, it's green and red, basically bullish or bearish. But within so if someone used, for example, a moving average, a 200 bar moving average, and say, okay, we'll classify bullish if it's above or if it's below, for me that wasn't enough, because whenever, for example, the market is above, say, the 200-day moving average, and although I'm not using moving averages here, but I'm just giving an example of, simple example of trend definition, you will have moves that are with the trend, and then you will have moves that are counter trend, so basically corrections within a uptrend, or if you're in a downtrend, you have bear market rallies. So I found a way to quantify this. So if you're stage 1, you're in a bull market, but it's an emerging bull market. Stage 2, it is an established, more well-defined, if you will, bull market. Then stage 3 is you have a pullback, a dip, and stage 4 you have a more full-blown correction. It's more deep than a pullback, but still not deep enough to change the trend. So I have 4 stages for bull markets, and 4 stages for bear markets, 8 in total. And this market map framework of classifying trends is extremely useful, to give me a rules-based mathematical awareness and definition of what the trend is, and create stage-specific strategies. So, if that makes sense, stage 6, that's where treasury bonds is in the most bearish stage, if you will. And I've just noted it here to for you to visualize it as well, not just quantify it. And as we start analyzing more markets, we will be plotting this on the market map so you can have a visual, a visual understanding from a visual point of view of where markets are trading right now with reference to the trend. So an established market, that's what treasury notes are. So let's look also at volatility. This is the volatility valuation index. It's an indicator I presented during my last webinar. So if people would like to get more information about it, it was inspired by John Bollinger. It basically shows you when there is too much volatility and too low, because when there's too much volatility, markets tend to terminate their trend, as John says. Low volatility is where trends go to high volatility is where trends die, and low volatility is where they go to where they're born. So again, this is a high volatility based on the volatility valuation index. Again, volatility valuation index, how trends reverse. So as things stand right now, we don't have a volatility valuation extreme, so the indicator doesn't speak. We are, again, as I mentioned, stage 6. And what this does, this is the relative ranker chart and table actually, and what this does is actually take all the markets within the same asset class, or at least the ones that I follow, and tries to rank them. Because why should one do this? Because if someone is bearish or bullish on an asset class, say I'm bullish equities, or bullish bonds here, even as a short-term trade, because this is a short, I'm bullish on bonds but on short-term basis. Some markets may be stronger than others, and what you want to be doing is going to be trying to buy the all things being equal, the stronger markets, or if you want to short them, you want to be selling the weakest markets. And on the bond markets that I follow, this is where treasury notes are. Such the German fixed income is the strongest bubble, and then treasury notes are then Bund. As you can see, the long end of the curve is the weakest, the relatively weakest. And this is how it would look like. So what I've tried to do is not leave it as a numerical model, also try have you to visualize it. And the this magenta line is the treasury note, and you can see how it compares with such, how it underperforms. And this is so all things being equal, it's better to be bullish the strongest market, again, if things are equal. So this is the more how it looks like. So the trend is bearish, it sticks, but the MACD model is bullish, sentiment is bullish, seasonality is bullish. So let's look at the setup score. So after I've done my macro and my technicals, then I go into the strategy and look at the setup score. So setup score is basically, I have markets that want to be long, markets that want to be short, and obviously some I don't have an opinion or I think should be neutral. And I'll show you an example of that as well. And depending on the trend and a couple of other factors, I grade the trades. So for example, A, B, C, D, sort of like school, A trades are best, D trades are worse. And this affects the position sizing. So again, if we go back, so setup score, which markets are want to be long and short, signals where to get in, stops where to get out, and size is obviously the position sizing, but it will depend on the setup score. So let's see the next slide again. So the higher the grade, the more aggressive my size will be. So for since this is a D grade trade, again I'll be playing on the long side, but since this is a D grade from because the trend is against me, I'll be having a smaller position size, and for A grades I will have bigger position size because, for example, trying to get a be long in a market that's in a well-defined uptrend has less risk than trying to uh, buy a market such as treasury notes, which are in stage 6. But still, for those that are feeling a bit more confident and with a smaller size, you can put this on the setup score. So let's have a look at precious metals. Again, this webinar today is an example of how I do my analysis on a weekly basis. If you're interested, again, email me, I'll be sending you more material. Right, so again, the commitment of traders report. These are the setups, bullish setups we had. The market, you see how it reacted. Mind you, again, this is a weekly chart, so you can see these are weeks. So you had plenty of time and big moves. What I'm doing here is I'm looking for big moves on the weekly chart, and then I go on the daily chart to do the actual trades. Second part is the so we had a minor sell alert. This is a tentative one because strictly speaking, I get the alerts at the end of the week. So as I mentioned at the beginning of the webinar, I do my macro analysis on weekends, on Saturday, and then the technicals I look um, on the daily chart. I look at the on weekdays. So this is how it looks like. So we have a tentative sell alert, and I say tentative because I would be doing looking this on Saturday, but since the webinar was scheduled for for today, and if silver futures and the data that come out on Friday, most likely we'll have a minor sell alert for silver, which means we might get some kind of a pullback. But we also have sentiment, the market flows indicator. Again, it's at an extremely bullish um, area. So, and the composite as well is turning red. Now, so from this is how it looks like with silver. Let's see with gold. Again, same thing. We have a minor sell alert, much center setup. Previously, we had some kind of the market flows were at an bullish extreme. These are previous occurrences where they're at extremes, either bullish or bearish. Now they're at their bullish extreme. But the composite itself is bearish. And silver, this is the seasonal index, and we are in amidst a seasonally bullish period. But seasonality is what I call a secondary macro factor, is not a primary, which means if the macro, the seasonals, sorry, the sentiment and the commitment of traders report show one direction and seasonality is conflicting that, I will go with a primary macro because seasonals are very important, but they say what the market should be doing historically. It doesn't tell you what it's doing now. So commitment of traders report and sentiment is now casting. So this is like kind of like forecasting. So it's a nice add-on to have when other things confirm. So now again, staying with precious metals, this is platinum. We had a minor buy alert, which gave a huge move. As we see also with the commitment of trade report data, the second panel. Now sentiment is at an extreme, both for the composite and also for the market flows indicator. So we need to have some caution with platinum futures. If someone's got a bit excited by the move, they're drawn into it and say, okay, we might be try long positions from a macro point of view, we may be want to be be flat, if you will. So this is how the roadmap looks like. COT bearish with the minor sell setup. Sentiment is stretched. Seasonality is bullish. But as I mentioned, I will be giving more weight because this is basically a weight of the evidence exercise, even on a rules-based um, framework with the COT and the sentiment. So let's turn to the daily chart. Again, silver futures, it's in stage 2, which is that from a trend point of view, the most bullish stage. Currently, volatility is not at an extreme, and the MACD has started turning bearish, so some caution may be warranted in the sense that what we have seen as the bearish setups on the weekly chart may start to be manifesting on the daily chart. So of course, we give the trend the benefit of the doubt. I wouldn't be trying to short this, which is way too strong, but I would definitely be postponing my long positions up until either the macros or the technical position, the technical picture starts improving. Now for platinum, again stage 2, the most bullish stage from on the trend map, but the MACD is above 150, so which means it is overbought from a momentum point of view. Again, I have webinars on the MACD and the volatility valuation index. Feel free to contact me and I will give you the information, the webinars. So platinum is a bit overbought. So this is how markets look on the market map. Silver, platinum, gold, precious metals are on an established bull market. Treasury note is on an established bear market. But silver and platinum, I would rather be staying flat. Again, between these, relative ranker, gold is the strongest market, then platinum, then silver, and then palladium. So setup score will remain as it is. I won't be looking this as a potential trade, more like a thing of what not to do, as in not get any long positions rather than short. So stick with treasury notes. So I covered this market, although it's not actionable, because someone may wonder, okay, since you're not be taking any trade this, why show it? For two reasons. A, because these are markets that interest people, precious metals, especially gold. So someone could ask, okay, what do you think of gold? So to serve this purpose, to show what people I think of gold. And secondly, also to show you an example of how it is to not take a position, because it's not just action that we get rewarded, but also by inaction, if you will, by saving our capital for better opportunities. And this is a market that I don't think it is worth the risk because they're way too strong. So I wanted to show my reasoning behind abstaining from taking any further long positions in the precious metals complex. Okay, so let's plug with energies, another popular market, and especially now with the news between the conflict between Israel and Iran, and huge rally we had in energy. And there have been a lot of headlines. It drew a lot of headlines. For example, crude oil prices could spike to $120. This is what JP Morgan says and explained in 6 key points. And then we saw another headline. Here's why oil will hit $120 a barrel soon and stay high for the next 2 years. Impressive headlines. Again, this is JP Morgan. These are well-known institutions, top of the tier. So how can we approach this with our allures-based methodology? This is light crude oil, and these are the signals, the setups, the COT setups I have based on commercial traders. And this is what happened in 2024 between March and May. Another one in August. Beginning of 2025, late 2024, we can't say that it was very successful. It lasted just for 1 week, and then the market rallied. The good thing is, with the way I have coded this, is if the market responds, it will stay red, which means you will start looking for sell signals. But if the market goes against me, I don't stick, for example, to the setup. I immediately reverse it, so it's quite adaptive, if you will. So right now we have a tentative sell alert. Again, I will be confirming this on Saturday. Um, I'm just showing this for as an example because we are filming this on a weekday. Again, this will be confirmed on a Saturday. So for the here now, we have a sell alert. As you can see, the sell setup for the COC, the sell setup from our mechanical system is bearish. So for now, I don't think anytime soon we'll be having a $120 per barrel. Maybe we will, who knows. I will be going on a rules-based, data-driven approach. So if the market takes out the COT sell setup high, perhaps we will. But for the here now, I don't see this. Again, staying with the energy complex, New York Harbor. Again, we've seen the CLC setups that work quite well. The major signals and the minors, as you can see, are more like provide the reactions counter to the trend. And now we have a new COT alert to be confirmed, of course, on Saturday. Gasoline, again, these are the major sell signals, sell setups. Some work well, some didn't. But now we have another sell setup. We do have, of course, the market flow sentiment index, which is bullish, and now it's in a bullish extreme, which gives a bit mixed messages. But the composite is bearish. Let's go to the last macro factor of the 4I see, which is seasonals. For crude oil, as you can see, from the 2nd of July up until the 21st of August, there is usual seasonal weakness. So we are fast approaching the window where bearish seasonality influences the market. Same thing with gasoline. We are already from the 10th of June, since the 15th of September, we have bearish seasonals. So to recap, based on our step-by-step rules-based methodology, COT bearish, seasonality is bearish. So this is the macro setup. Let's go to the daily chart. So daily chart, usual, according to a usual methodology. First step to see the trend, market map, stage 5. Stage 5, which is bearish. We see that the volatility valuation indicator has given an extreme right at the top, and momentum has just turned bearish. So volatility has been at an extreme, and that extreme reversed the trend. Sorry, the momentum, and we are also approaching the seasonally bearish window from the 2nd of July to the 21st of August. For gasoline, likewise, stage 6, momentum started turning bearish, and we were at a right at the top was formed with an extreme at the volatility valuation indicator. So let's look where we are. Crude is in stage 5, and gasoline in stage 6. Again, this is the benefit of the market map, because not only it gives you a very rules-based and disciplined way of classifying market trends, but also can also have as a visual tool to give you a big picture of where the asset classes are. Relative ranker, again, to show you the strongest markets: natural gas, then gasoline, heating oil, light crude, and Brent crude. So again, if someone wants to have the bullish bias, natural gas, all things being equal, would be your best bet. And if someone is trying to short, Brent would be the best candidate if you just look just solely from the relative ranking point of view. Again, volatility valuation index, MACD model, and trend market map. So short, potential shorts, crude oil and gasoline. I will be waiting for my indicators to give sell signals. So these are potential short candidates, crude and gasoline, as soon as the market quiet down a bit. So softs, let's go look at softs. These are another good setup, again following the same methodology. Coffee futures, weekly chart, commitment of traders report. As you can see on the we had a major buy signal between July and September 2024. August the market responded with a huge rally. We had some counter trend corrections with the COT minor signals. We had a major signal, major setup in May, and gave us a good 3-week rally, but the market has taken out that low, which is a bit suspect from a commitment of trader point of view. But sentiment has now is at an extreme. So we need to be a bit careful now that sentiment is at an extreme, which means that the market may be prone to a big rally. This is something to be closely watching, especially since we are already in an uptrend. And this is now, let's switch to the daily chart. This is coffee futures. As you can see from the bottom, it is at stage 4, which is the correction part of a bull market. The MACD is at the range below -50, which usually provides some kind of a definition of oversold level within a bull market. Again, send me an email. I will provide you with more details how to read the MACD, the twice awarded momentum indicator. And we're also entering a bullish period from a seasonal point of view. So coffee has various things going for it. Again, volatility valuation, we see how it can be used for calling tops and bottoms and extremes. So coffee, as you can see, is in stage 4, and we're looking to go long. So this is quite interesting because now we're not just looking to go long a market that is in stage 6, for example, like treasury notes, but we're looking to go potentially go long a market which is in stage 4, which is bullish. So hence that will influence both the timing tools and also the position sizing. But interestingly enough, look at that. If you, for example, stage 6 has 2 markets classified there, treasury notes, RBOB, and one we're looking to go long and one to go short. And the difference between is the macro picture. And someone who's purely a technical trader will say, okay, both are bearish, try to short them, but things are not that simple. Setup score. So coffee now is potential long on as a B grade trade, which means we'll have better position sizing than treasury notes because this is a D grade. Again, this is the setup score. This is something I do on weekends, and then I go on the daily chart to look for the actual signals and patterns during the week. And finally, we'll be looking at soy complex, and then I'll be opening up the floor for questions, or if you want to be looking at a particular chart that you may like. So let's go into the soy complex. Right, so soybeans, this is how soybeans look like with the COT cell setup alerts and the, again, commitment of trader report, the setup alerts. Second panel is the actual COT data. The red line is the commercials. Blue line is the large traders. Third panel is the market flow sentiment indicator. And then I have the sentiment composite. And based on, we had a major sell signal, sell setup for the commitment of traders report. And this week the market seems to be responding to it, and this is how it looks like on the daily chart. So the market is in stage 7, which means it's having a bounce, in a bear market bounce. Whoops, I think you got a bit trigger happy there. And we are also within a seasonally weak period from June 9th till September 4th. So we have a sell setup, commitment of trade report sell setup. The market is already weak, it's in stage 7, and also within a seasonally bearish period. So a lot of things line up. So again, COT score is bearish, seasonal is bearish, trend market is bearish, and so we have a lot of things lining up for a good short. The MACD is also turned bearish. Whoops, has also turned momentum is a bit bearish, and the volatility valuation index is not at an extreme, which means it's not it will not be flashing a potential reversal. So the odds are favor a continuation of the trend. And so soybeans will be stage 7. So we'll be looking to short a stage 7 market. And this is how it looks like. So free bonuses for those that manage to stay awake. As I mentioned, the course, and also if someone would like to learn more about the methodology, they can follow the course, and if you would like to implement it, go from information to implementation, you can also get the closed code indicator you just saw, get the coaching, and the coaching is basically a forum where one can ask questions about the course you will be having for free, live webinars, and also Alex's analysis, which is basically what you saw right now, and also a community. So all you have to do is just send me an email, and I will make sure you get the courses for free. And if there are any questions, by all means, feel free to send right now. I'll be opening up the floor. And if not, we can end the webinar. Any questions? Right, yes. The commitment of traders report, when is it published? The commitment of traders report is published on a weekly basis. It shows the position, in a nutshell, it shows the positions of the largest participants in the in futures markets. Commercials, again, of course, depends on from market to market, but usually they control around 60% of open interest. And open interest is basically the number of unclosed positions. And it is they have unlimited positions. They don't have any position limits. There are the counter trend traders, and they hedge their positions. They participate in futures markets to hedge their positions. So for a market, so basically you can have producers or consumers of a commodity. So for example, if you look at energy markets, some a company where can I find the recording of the webinar? Again, email me and I will make sure you get the recording, because I'll put it on YouTube. So again, going back to the question, the COT question. So you have producers and you also have consumers. So for example, using energy markets, BP would be classified as a producer, and BA would be a consumer, because it uses energy as part of it's doing business, flying the airplanes. Or for example, Coca-Cola, who is a massive player in sugar markets, because that's part of the process of creating. It's a raw material for creating Coca-Cola and all the fizzy drinks they do. So they do participate in futures markets. So through the commitment of traders report, you can see the positions of these huge traders. And so that's one part of the large trader category. The other one is obviously hedge funds and trend following funds. Very, very interesting topic. Another question that came in is regarding the MACDV. Yes, the MACDV is an indicator I created in 2015. Um, I wrote a paper. I was working with it for about 7 years, and in 2002 I wanted to sort of like disclose it, and I wrote a paper on it, and it was awarded twice. I won the Charles Dye Award from the CMT Association, the largest technical analysis association globally, and also the Founders Award by the National Association of Active Investment Managers. And the MACTV basically solves various problems. It's an innovation, I would say. It improves the 5 limitations of the classic MACD and also addresses the limitations of range-bound indicators like the RSI, the stochastics, and so on and so forth. Because unbound indicators, sort of like the MACD, are not normalized, and then you have normalized indicators like the RSI, but are range-bound. So this is an innovation because it has the best of two worlds. So this is the question, my reply for the MACDV. And if there are no more questions, I would like to thank you again for your attention. The webinar of the recording, there will be a recording for the webinar. Please send me an email and I will make sure you get the recording. And I would like to thank you all very much for your attention. I hope you enjoyed this as much as I do. And God bless.